Abhishek Anand, fund manager at Centrum Broking, is now joining us live. Abhishek, good afternoon. What do you make of the pay commission report that came in? What do you make of how markets are rallying in the last few days or so? Do you think that this bull run would continue?
See, what we see is definitely some of the news flows and the development which is taking place broadly on a broader market basis are also indicating positive in terms of news flows. But what we see is on a market perspective, it may remain range bound. What we have seen is a good move post even the Brexit event happening, and also the fact that we are now going to enter into the Q1 result season. Hence, we see that it may remain range bound and individual stock specific will be more important to take a watch on. Pending that, in terms of sentiments and the output, we see that long-term trajectory-wise and some of the news flows like 7th Commission and all which you are highlighting definitely bodes well. Also, it's important to see how the monsoon session, what developments takes place, and also the current monsoon, how it pans out, and whether it is well widespread and the numbers look much better from what it is currently. The number week on week we see is improving on the monsoon side, but definitely it is important to have a watch on it.
Right. Now with the rally in the mid cap for the last 12 months, going into this result season, do you think expectation from mid caps are particularly higher than the large caps?
You're right. Some of the mid caps have seen good move, and we'll have to see individually basis what outcome one is expecting and vis-a-vis actually the result one actually when the companies actually declare. So it has to be looked at from a conjunction that how the trajectory is moving and vis-a-vis their valuation, and individually one has to take a call. But broadly, what we have seen is a good run up in the mid cap post, especially in the last few trading sessions.
Right. As far as the recent rally is concerned, a lot of under-owned names are actually, going ahead and giving this rally. So names that were not owned or people did not want to touch, all of those names have started to move up. HINDALCO has led the move, Vedanta has led the move. Tata Motors, even though it was an overweight consensus call, it never really performed, but now is doing particularly well. ONGC has done well. A lot of PSU banks have done well. So do you think it's about under ownership now? People are getting lesser and less in terms of newer ideas. So they're trying to buy the under-owned names where they can see some value?
Yeah, typically you would have seen that first the good names, the stronger companies tend to attract interest when there is a flow and positive movement in the market. And once that saturates or the opportunity is lesser in the space, that's where there's a tendency to move to under ownership or lesser known names. And that's where we are witnessing once the good names rally has been seen. Now the market is seeing some of the under ownership names or sectors getting attractions, and to that extent there is a move in some of these space.
Right. So how would you play this under owned name? I mean, they are not under owned they have under ownership. They have not done well because of a reason. So what essentially one should look at in terms of any recovery for any of these companies?
Absolutely.
How should one evaluate that?
So typically what we go for is more sound and fundamental reasons has to be there to back it up for the move to justify. And same we would suggest one has to evaluate whether there is anything significant development on the positive side or the earning trajectory seems to be improving, and that is that has to be premise behind holding on to these names or adding on to the names within the under ownership pack, so to say. And basis that one should take a call rather than getting swayed by the movement. And so probably traders can look at it differently, but purely from a fundamental perspective, one has to really see whether there is really a merit in the fundamental improvement for these stocks to take a longer term view.
Right. So there are two kinds of stories. Let me just give an example of HINDALCO. Their new plant is coming up. They have done majority of their capex. They have taken their debt. Of course, their interest cost has increased, but now their capex needs would come down. Aluminium prices have gone up, and they are one of the low-cost producers. So expectation is that they would start to make free cash flow. You should look at such companies. Of course, they are owned by Birlas, so they also have a legacy coming in of the promoters. Should you look at these sort of names?
So without getting specific into a particular company, generally speaking, what we see is if the commodity, especially in the commodities on the metal pack, if the commodity is seeing a long-term trajectory of improving trend, that's where we have seen that there's a high correlation between the commodity and the stock performance, because there's a direct correlation with regard to earnings improvement whenever there is an uptick in the commodity cycle, and similarly that translates into stock price movement. And to that extent, one has to take a call and evaluate whether the commodity itself is driving demand, whether the supply demand scenario is in favor of that particular company, and basis that one has to look at it. We see that especially some of the large metal companies, basis the natural adjustment which typically happens in any commodity cycle, if that has happened and the inventory levels into the systems are low, that's where we see that there's a higher tendency of prices to move up on an uptick, and that's where one has to look, evaluate and take a call.
Right. So that's a story where we are seeing a recovery coming in or business fundamentals are changing. Second is something like a DLF. Huge debt issues. Of course, nobody was questioning the business model, but company got over ambitious in terms of capex, in terms of taking debt, not being able to deliver or not being able to give efficient sales, where a good deleveraging exercise has been taken. So deleveraging, that's what you would look at. Promoters which are infusing money into their companies, which are very debt heavy, trying to sell non-core assets, that is where something a delta can be made.
See, some of the points which you mentioned probably attracts in the shorter term, but what is essentially to look at whether especially in the real estate sector, there's a lot of uncertainty element with regard to future earnings, and to that extent one needs to really see those pertinent or longer term sustainable triggers in the fundamental which clearly show sign to improve, rather than looking at the non-fundamental factors or non-operational factors such as interest savings, etc., to see the near-term delta on the earnings side. So we would more focus on operational improvement rather than the financial engineering side improvement, which helps temporary or near-term on the earnings side. Right. And we would suggest to look at from an operational perspective rather than.
And something like a telecom where debt is not a major issue, but overall the competition is very high. Things have not changed as they were expected, but prices have gone down. So are they now finally at an attractive value?
We have seen good movement on the stock price perspective within the telecom sector, but we would again wait and evaluate further on the fundamental improvement side, whether really the kind of operational performance can take away the or absorb a large portion of the leverage which is there in the balance sheet. And also again the spectrum announcement has started to happen, and we'll really be little cautious, or we'll observe for now rather than taking a long bet at this point of time. So we would be little cautious and observant on this particular sector at this point of time, basis the way the sector is positioned right now and the forthcoming event, which we'll have to see how it unfolds.
Abhishek, when we are in Delhi, we speak to people running businesses and entrepreneurs. There's a great deal of sense of anticipation, hope, but at the same time, no one wants to be the first mover. So everyone seems to be watching out what is someone else doing. Where are you seeing, which sectors are you seeing some sort of first movement happening, investment happening, some return of significant amounts of demand? If you could identify some sectors.
So in terms of sectors, what we have observed is generally the investment led, be it government side or generally the private investment side, or sectors such as cement, for instance. It's more like a quasi play on the infrastructure, so to say, and there we have seen that some improvement on the volume side has also happened. And when we see and talk to companies, there has been some element of price increase absorption also seen there. Incrementally, for the few years, we see not many significant capacity getting added. Assuming that the monsoon, the way things are being talked about, if it pans out on the positive side, clearly this is one sector where we see good demand improvement, and also price-wise we can see improvement happening, and that culminating into higher profitability numbers. So this is one sector where we see interest coming from a medium to longer term perspective. The other side is auto, NBFCs, banking side, and consumer-led sectors.
To cement a little bit. We saw that cement utilization, capacity utilization in cement was depressed for some time, and all the the plans to expand were put on hold. What are the capacities that you're seeing, and if you could just tell us region-wise, so that our viewers get a sense as to where is capacity expansion likely, utilization better? As I say that I'm not asking you to give me stocks, but if you could just give regions so that our viewers can get a sense.
Yeah, sure. So what we see is, clearly from the past learning, across India, if you see, there's no major capacity addition being announced, be it north or eastern. In terms of demand, clearly, north was majorly hit, which we are seeing now, seeing the scenario improving. And that's where, if you look at region-wise, what we see is north, central, and eastern seeing improvement in the demand side. And in general, if you see on a pan-India basis, what we see is not major capacity getting added on the demand side. If the monsoon picks up well, that's where we see demand side improving and price getting absorbed in the market, which was not the case, say, 6 or 8 months back. And that is where we see different geographies, be it north player, south player, or eastern player, benefiting out of these developments.
And the government demand you were talking about for infrastructure, you said that play cement as a proxy to infrastructure. Tell us the logic behind that. Why not infrastructure directly? What's the problem there?
Absolutely. So what? Yeah, sure. So many a times what we see, there are individual specific, subsector specific issues. See, with the benefit of cement is that you see, a much healthier balance sheet, and also indirectly the demand comes to the sector. Say, for instance, if there's a lot of investment happening on the roadside, no doubt the road players also gains out of it, but we'll have to evaluate the business model within those companies. But generally there is a indirect benefit coming onto the cement players as well. And likewise, if there is a lot of investment happening on the, say, rural infrastructure, affordable housing side, you may not have much of the play on the real estate side, but definitely that indirect demand benefit comes onto the cement sector. Okay. And this is one space where you see much healthier balance sheet compared to some of the other infra players. And hence we say this.
So the logic is buy the suppliers, don't buy the end seller.
Not really. So prefer this, and also evaluate the first beneficiary within the infra pack. But there you will have to, what we see is one has to look at really case specific rather than generally speaking on the overall sector.
All right. Before I ask you something specific to the 7th Pay Commission, we just want to let our viewers know that there is a bit of a issue. We are not very certain how much of this money is actually going to go into the hands of the government employees, because there have been some changes that have been introduced. The allowances that were allowed till now, that has been reduced, that is being merged. Basic is getting merged into certain things. There's a certain amount of concern whether there'll be double charge on in terms of provident fund. Well, provident fund deduction, which used to be only on basic, whether that's now also going to be taken on the allowances. There's also a concern that employees have about the HRA. Is the government's deduction of HRA in terms of wherever the government gives housing, is that going to increase? So there is some concern about the amount of money that's going to come into people's hands. But let's assume that at least basic pay has gone up by 20% minimum, and in some cases 25%. And the general consensus seems to be that this is going to go into the consumer durables, perhaps auto, the consumption sectors. Where would you put your money as far as the 7th Pay Commission goes?
So, like you mentioned, auto would be one area where we would look at demand getting generated. Second would be consumer durable led sectors. Clearly, because one is low base, and secondly, one tend to first look at consumption based spending, and then the higher ticket items follows later. So these are the prominent ones. Immediately one would look at companies getting benefit within these sectors, and where we would evaluate ideas.
Would you consider real estate at all with arrears coming in? Although this would be arrears for just 4 odd months, but in some cases the arrears could probably run into a few lakhs. That could probably create a base from which for someone to take a housing loan and then buy that house they'd been thinking about but not buying. Is there some chance of inventory being absorbed?
See, possibility, but we would like to wait there. Rather, we would go for NBFCs who are more focused on housing finance, and we would rather play there, because what we have seen is historically there has been a consistent growth, and the expectation is that that growth momentum is likely to continue without much deterioration on the asset quality. So we would rather play there where there is a surety, there is a track record, and also the expectation is that once there is a pickup in demand for the real estate, these companies would continue to gain. And then case to case basis we will evaluate, but not immediately. We'll have to, we'll see and wait and watch in the real estate pack, but rather play on the housing finance companies.
There had been a bit of an idea that people said that let's look at e-commerce play. Anything which has an e-commerce play or is a supplier to e-commerce is worth buying, like logistics. Is that over, you think, now?
So, in terms of e-commerce, definitely there has been, if I look at purely from the news perspective, there has been some impact there. There are many large e-commerce companies trying to look at cost side, which was not the case, say, 1 year back. But within, the opportunities, we see very limited opportunity, direct play on the e-commerce side. But not to say that the entire story is over. The only thing one has to look at how the pace is and which all companies are likely to continue benefit within the space they are operating in, and how the overall business model is.
There are a few even till
where,
6-7 months ago, people used to say buy logistics, buy retail, which could become e-commerce later on, buy anything like that to get a play into e-commerce, buy the companies which supply riders, for instance. But now with e-commerce facing a bit of funding crisis, would you say that we'll see a bit of value, people will rethink all those investments?
So there's a possibility of rethink, definitely, because what we hear and see is definitely there is a bit of a conscious effort to look at the cost side of the business as well, and that's where we'll have to see whether the kind of projections which were being talked about for the companies serving these e-commerce that holds, or there's going to be a tapering effect on those earnings, and basis that one has to evaluate. But given the current news flows, one has to really evaluate it and then take a call. To that extent, we are in the process of evaluation, and do not expect clear e-commerce play to really talk about. But nevertheless, if one has to say that there is no opportunity, no, there are opportunities, but we'll have to see individual case basis rather than taking a very generalistic view on e-commerce beneficiaries.
All right. Thank you so much, Abhishek Anand. I'm not going to ask you for any disclosures since you didn't stock any stocks. Thank you. Nice talking to you.